Right, hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Can I get a quick screen check and mic check? Can you see the almost complete guide to trading here? And can you hear me okay? Administrator, can I just get confirmation, please? Right, brilliant. Thanks, Maurizio. Okay, right. Okay, hope you're all well, guys. Hope you've had a good start to the week, and we're coming into obviously the festive period, Christmas, and towards the end of the new year, towards the end of the year, and into the new year. So I wouldn't quite shut yourself off from the market just as yet. I wouldn't have that consumer mentality, the employee mentality, where over Christmas everyone gets into holiday mode and nothing really seems to happen. People just like to kick back and relax and spend time with the family, and that's all well and good. That's what this period is for. But in terms of the market, I wouldn't bring that mindset to the market because over the festive period, there can be potentially movements in the market. In the stock market, this is known as the Santa Claus rally, but we can also see trends appear in foreign exchange. I did a webinar last week. Again, thanks to FX Street, there was an extra webinar, I believe it was last Friday, where I was invited to give my views on 2017 and where the trends are likely to be. And my opinion hasn't changed. We're going to be looking at some of those opportunities in this webinar. Before I actually get into my chart, I'd just like to direct you to the ebook. I know a lot of you guys have been emailing me, contacting me regarding the ebook. Just a brief background of myself. I'm a long-term trend trader, so the regulars to my webinar, to my FX Street webinars, will know that I look for long-term opportunities in the market. I do not day trade. I'm not in and out of multiple trades on a single day, and I highly recommend and I highly encourage that you guys adopt the same philosophy and the same approach. Day trading works if you have the funds of a bank. Many do not have the funds of a bank, and so you need to have a different approach. You want to have a slower, a smarter, more methodical approach. But this approach is very underrated because people want money, and I understand that. People want instant gratification. People want to get out the jobs. People want out the system. People want money, and so day trading is very appealing. But you have to question that if only 5% are ever successful at trading, what is it that the 5% are doing that makes them stand out from the 95% that repeatedly fail? And the answer is really, first of all, having the right knowledge and approach to the market. Secondly, understanding that this is a marathon, it's not a sprint. Investing into good software, good knowledge, and then taking your time to build an account through capturing long-term trends. You want to build your account year in, year out. You don't want to have a flash in a pan style of trading where you're in, maybe make a bit of money, get out, but then the next time you do that, you're just going to give it all back. You want to rethink your approach. So as we come towards the end of this year, maybe rather than shut off, think back over the year, review a year, look at what's worked, look at what hasn't worked, look at the strategies that you're using, look at the risk management that you've got in play, look at the portfolio that you've tried to manage. Have you had the right instruments on your portfolio? Should you be looking to expand your portfolio? Are you focusing just on foreign exchange? Should you be looking to stocks, UK stocks, US stocks, stocks in your country, wherever you're from, commodities? You know, you want to start thinking more in terms of how can I be better than I was this year. And that may not necessarily just mean in terms of money. It could mean in terms of your whole approach, because if your process isn't there, the money's not going to be there. So you want to think about how can I make the process better to make the money come in easier. Don't be outcome driven, be process driven. And this ebook, guys, will help you towards that, because it will help you understand technical analysis from a long-term perspective. So if I just go down, you can see that the contents are pretty much there, from the very basics of establishing a trading bias all the way down to a trading plan. This is a 60-page ebook, diagrams, explanations. It's a groundbreaking ebook, guys, and I doubt you will find any information out there that can really compete with the information that's being given out in this ebook. We're really trying to get private traders. This is key point here. We're really trying to get private traders to think and act like private traders. If you're a private trader and you're trying to copy a hedge fund, you're going to be disappointed. If you're a private trader and you're taking advice from a broker, you're going to be disappointed. What you want is to learn to be a private trader, and to do that, you want to adapt the approach and the philosophy of successful private traders. And this ebook will really help you to get to that stage. Okay. To get hold of this ebook, please email me on zaheer@zaheeranwari.com. zaheer@zaheeranwari.com, and I'll be emailing that out to you at the end of the webinar. And also, if you're watching this on replay, because I know this is being recorded, if you're watching this on replay, guys, as well, zaheer@zaheeranwari.com, just email me. Okay, now let's get to the charts. The last couple of times I've done a webinar for FX Streets, I've had a little bit of an issue. So hopefully it's not going to happen this time. Okay, so I'm now showing my charting package, which is eSignal. Administrator, can I get confirmation, please, that you can see? Yeah, yeah, brilliant. Okay. FX Ambassador GU, please. I'm assuming that means pound dollar. Yeah, sure. We'll have a look at the pound dollar as part of the analysis. Okay. So what you can see in front of you is a typical chart setup of mine. Top left corner is my watch list. Aussie dollar, US dollar at the top, goes all the way down to the South African rand, Japanese yen at the bottom. As already mentioned, my watch list also includes UK stocks, as I'm based here in London in the UK. I look at US stocks and I look at commodities. So those are my preferred markets. Top right corner, I have the monthly chart. Bottom left, the weekly chart, and the bottom right, the daily chart. So you can instantly see that I'm looking at the bigger picture. There's no 4 hour, there's no 1 hour, there's no 5 minute. Everything is done on the larger time frames. The monthly chart is where I look for support and resistance. The weekly and the daily is where I look for trend, direction, and alignment. Now, depending on which strategy that I'm using, depending on what price is dictating, I either enter on the weekly or I enter on the daily. And depending on how I enter, I will also manage my stops on that particular time frame. So I could enter on the weekly and manage my stop on the weekly. I could enter on the daily and manage my stop on the daily. Where a lot of people go wrong is that they may enter on a larger time frame, but then they go down to a lower time frame, like the 4 hour, the 1 hour, to manage stops. Guys, it's a crucial mistake, because you may be on the right side of the trend, but because you are managing your stop on a lower time frame, you're dealing with more candlesticks, you're dealing with more noise, more intraday noise, and you're getting stopped out quicker than you probably would want to. Now, of course, the challenge in trading is holding during the pullback periods. And this really comes down to understanding price action. And this goes back to what I was saying at the very beginning, that most people haven't got that foundation of knowledge to allow them to hold positions for much longer than they would like. People are going down to lower time frames, and it's purely based out of fear. Once you're in profit, you want to manage your stops because you don't want to give back profit. But if you don't allow the trend to develop, you won't allow as much profit to come in as you would like, and you will always struggle to grow an account. You know, you cannot expect price to just shoot off in one direction. Price is like a lightning strike. It goes, it comes back, it goes again, it comes back a little, it goes again. So it's like a lightning strike. A trend has a structure to it, which you must not only expect, but you must embrace it. A trend is a function of time, after all. So looking at the monthly chart, so I'll just open up the monthly chart, and I'm just looking at the Aussie dollar, US dollar here, which is the first one on my watch list. Naked chart at the moment, nothing on here. So the first indicators that I'm going to bring up are these pink lines. So the pink lines represent the high, the low, and the close of the previous calendar year. The high, the low, and the close of the previous calendar year. As we're still in 2016, this is the high of 2015, the low of 2015, the closing price of 2015. There's two uses for this. First of all, these act as support and resistance. And secondly, price, it helps me to start giving price a bias, developing a biased price action. In trading, nothing is guaranteed. What we want to establish are high probability environments where we have more chance of making money than losing money. You must have what is known as an edge. You must be able to define your edge. If you do not If you cannot define your edge, then you do not have one. And if you do not have an edge, then you will get eaten by someone who does. And this is very, very crucial, because trading ultimately is a win-lose game. For every winner, there has to be a loser. Of course, you have the broker who takes his cut or her cut, but ultimately this is a win-lose game. The broker always wins. Be aware of that. Okay, so what you want to do is be on the right side of the trend. To be on the right side of the trend, you have to establish high probability environments. Going back to these pink lines, if price is inside the pink lines, I generally stand aside. If price is above the high, price has a bullish bias and I look for long opportunities. And if price is below the low, price has a bearish bias and I look for shorting opportunities. Sometimes price may be inside the pink lines and it's trending or it's offering an opportunity. I may take the opportunity, but I will reduce my risk. So if price is either above the high or below the low, then I will allocate a full 2%. If price is inside the pink lines, but it's looking interesting, then I would take the trade, but I would reduce my risk to less than 2%. So maybe 1%, 0.5%, 0.25%. Okay, so this is the first thing that I look for. Now, my software will automatically adjust these pink lines when the new year kicks in. So when 2017 starts, these pink lines will adjust to the high, the low, and the close of this year, which is 2016. And 2015 then becomes obsolete. I'm always looking at last year's levels. Okay, so looking at the Aussie dollar, US dollar, prices within these pink lines. So generally, I'm not looking to trade it until it breaks below the low or above the high. Now, the next tool that I want to bring up are these red and green lines. What do these represent? These represent major pivots. In your trading, you must have very, very clear rules on everything that you do. What make good levels of support and resistance? What make weaker levels of support and resistance? What makes a period of consolidation? What makes a pullback? What makes a breather? If I'm applying a trend line, what are the 2 points that I'm going to click on? There has to be a systematic approach to everything you do. You don't want it to leave it down to feeling and intuition and guts and what your gut is telling you or what you think is the right thing to do. This is where traders go wrong. As private traders, we are at a huge advantage because we don't have government rules and regulations to follow. But what that means is that we must learn to establish our own rules and follow those rules to a T. The fact that 95% of private traders fail obviously means that private traders are not very good at that. What you want are proven rules that already work. When I started trading in 2007, I came from a background of teaching English and I was a photographer. I was working very, very long hours. I haven't come from an institutional background. I don't have a degree in finance or economics. I haven't worked for a hedge fund. I've got a degree in IT. I became a software engineer. I worked for a year. I quit. I then became an English teacher. I traveled around Asia. I lived out there for a couple of years. I came back. I became a photographer. I was in the photography world for about 4 or 5 years. And through that journey, I then became a trader. Now, when I looked to trading, what I wanted was simply to know how to trade. I did not have the time and the inclination to try and figure this all out by myself. I really do admire you guys that try and figure this out on your own. I really do. The time and the hours that you guys sit in, the amount of money you guys probably lose, the amount of time that is lost. I really admire that you guys put yourself through that process. I'm very, very lazy when it comes to these kind of things. I simply want things that work. I want to be able to sit with someone who knows how it works and to get me to do it. It could be for anything. Anything and everything that I've done in my life, I've approached it the same way. When I tried learning the guitar, now it doesn't necessarily mean that I end up being good at it. I tried to learn the guitar, wasn't very good at it. Mostly because I didn't have the passion. I just felt like learning an instrument. The guitar was the easiest that I seemed to pick up. But the point is, I found a teacher and he was very good, and I went through that process. Same thing with trading. I wanted someone who had the rules that would make it work. And these rules that you see in front of you, i.e. the pink lines, the major pivots, these are rules that have been given to me. These aren't rules that I've made up myself. These are proven rules that have already worked. And these rules have been in play for decades. And these same rules, guys, are what I explained rather in the ebook that I hand out, the one that I showed you at the beginning of this presentation. Okay, so let's move on. Weekly and the daily time frame. If I go to the weekly, 200 simple moving average and the 50 simple moving average. These are the two moving averages that I use on the weekly time frame, and I have the same logic on the daily time frame. So I have the 200 simple moving average on the daily and the 50 simple moving average on the daily. What I'm looking for is price to be trading below both of these moving averages on the weekly, below both of these moving averages on the daily, and below the pink line on the monthly. That would give me a strong bearish environment. In a bullish environment, I want to see price trading above the pink line, on the weekly above both moving averages, and on the daily above both moving averages. That is what I would define as my edge. I've just explained to you guys what my edge is. I know it very clearly. I know exactly what I'm looking for. If I do not have that setup, I stand aside and I look for the next instrument that has already got that setup. And this is where a big portfolio comes in, a big watch list and portfolio management. This is where it comes in. If you're just looking at one instrument like the pound dollar or gold, there'll be long periods of time where you're trading that in a low probability environment, i.e. in a consolidation. And in a consolidation, it's a fact that you have more chance of losing money than you do in a trend. In a trend, you have more chance of making money. So what you want to be doing is looking for trending instruments. This may not be in foreign exchange. The trending instruments may actually be in stocks. So if I bring up NVIDIA, I'm sure a lot of you guys are very familiar with NVIDIA. NVIDIA is a company that makes graphics cards for PCs. So if you look at your PC, there's probably a sticker on there already with the NVIDIA logo. I understand that they're also branching out into artificial intelligence. So you can see that NVIDIA has just been going through the roof since the start of this year. This stock has returned me more profit than any currency has. And that's simply because of the software that I have and the instruments that I have on my watch list. I'm able to move to where the money is. This is quite clearly where the money is. If we go back to the Aussie dollar US dollar, and if you're pulling trades on the Aussie dollar US dollar, you can see that in that same time that NVIDIA has shot through the roof, the Aussie dollar US dollar has done nothing. So if you've executed any trades on the Aussie dollar US dollar, you've missed out on much better opportunities elsewhere this year. Okay, so just focusing on currencies for now, we can see that price is inside the pink lines. And for that reason, I don't want to take any short trades. The weekly and the daily are looking good. Below the 200 on the weekly, below the 50, below the 200, below the 50. We've also got a death cross taking place here. So the 50 is now crossing below the 200. We're now starting to see weakness to the downside. But until price clears out of these pink lines, then I'm not looking to take any trades. If you do decide to take any trades based on this trend that's presenting itself, then you want to be aware of the fact that there is a support level directly ahead. So that's not that far. It's only about 100 odd pips away. So if you do take any trades, be aware of where the support levels are. And this is my point. When the market is in a trend, when the market is in a consolidation, price has a lot of support and resistance levels to contend with. Makes it a very, very difficult way of trading. Whereas if it's in a trend, there'll be a lot more clear space ahead. Okay, let's have a look at the Aussie dollar Japanese yen. Aussie dollar Japanese yen. The yen currencies have been gaining quite a bit of strength. Now, if you look at the Aussie dollar Japanese yen, now a feature of currencies, and this is something that I'm sure people are aware of, but not everyone will be aware of, is that currencies tend to be quite cyclic in the way they move. Because they're paired, you can see how currencies tend to have a cyclic nature to it. So we've had a lot of weakness on the Aussie dollar Japanese yen, but we've now seen a change in sentiment and prices now heading to the upside. Look at how price is reacting to the closing price of 2015. It's acting as a level of resistance. You can see that price is struggling to break through. Directly above that, we've got $90. If I'm looking to take any long trades, then I would, at the earliest, I would want to see the $90 mark cleared, and then we've got clear space towards the $100 mark. Now, this is an example of how, if the market is in a trend inside the pink lines, then I would look to place trades if there is clear space ahead. So once it clears $90, we've got 800 to 1,000 pips towards the high of 2015 and the major figure at 100. That's a significant amount of space. So if I look to take any long trades, I'm going to do it, but I will reduce my risk. Okay, if you look at the weekly, above the 50 but below the 200. So that's another reason to be patient, because if it clears the $90 mark, then it's likely to clear the weekly 200, in which case we'll then have strength to the upside. And if you look at the daily, already above the 200 and the 50, and that's expected, the daily will react first, the weekly will then follow. All in all, this is looking interesting, but this is where a skill in trading that many seem to really misunderstand and really underappreciate is the skill and the application of patience. Patience is essential in trading, because if we're waiting for our edge to appear, if we're waiting for these high probability environments to appear, there has to be an element of patience involved. But because of the way we are programmed to make money, which is as a 9 to 5, go to work, get an hourly rate, a weekly, a monthly, a yearly salary, because of the way we are programmed from a young age to make money, many come to trading and try and replicate that same mindset and philosophy. This is not a job. You cannot, first of all, quit your 9 to 5 job to be a full-time trader. People use this word very loosely. I hear it all the time. I've quit my job to be a full-time trader. But if I ask how long they've been trading for, maybe a month. It's a suicidal move, because first of all, you don't know what you're doing. Secondly, the strength of trading is to leverage a salary. If you don't have money coming through, what do you have to leverage? If there's no money, you've got nothing to leverage. You can't make money out of thin air. An account with £100 in there, or $100, or even $1,000 is not going to bring you the returns that you want. What you want is a job and a salary coming through, and then instead of putting money into a trading account, into a savings account, you filter it into your trading account. So you grow it and you leverage it through trading and through saving. Okay, so and the other benefit of having a job is that you can then adapt trading around your job. You don't want to be glued to your screen all day, every day. It's not how it's done. You want to be able to have a set and forget. You hear this quite a lot. You want to have a set and forget approach. Yes, that is correct. But the set and forget approach has to be very specific. You don't want to have a set and forget with a target in place. So if it hits your 100 pip target, you take your profit. That's not set and forget. What you want is to have your process in play, allow your trends to run and develop for months at a time. You don't want to be in and out on the same day. That's not technically set and forget. So going back to what I was saying, you want to bring an element of patience to the way you trade. Allow these environments to appear. Once this clears $90, this will start looking interesting. Okay, Aussie dollar, New Zealand dollar. We can see the last time I traded the Aussie dollar, New Zealand dollar was back in 2013. And you can see why. We had this big drop to the downside. Very profitable trend. We then went through an area of consolidation. So it was around this area here where I got stopped out. Since then, this has just been consolidating. And you can see very clearly, guys, trend, consolidation. And look how jagged this consolidation is. This is not an area you want to be getting caught up in. Now, the reason why I'm analyzing this, because if we see further weakness to the downside, it's already trading below the closing price. So potentially seeing further weakness. If it clears the figure, the round number 1 and this whole floor, if it clears this, then we'll see weakness to the downside. Below the moving averages on the weekly, below the moving averages on the daily. So the weekly and the daily are looking interesting, but we're still inside the pink lines. So for this reason, I'm not looking to trade this. But if it does break out, this is definitely one to have on your watch list. Okay, going to have a look at some of the dollar currencies. So the US dollar, Canadian dollar, trend to the upside. We had a correction, and since then, price has come back up. So this 1.3 round number zonal area, price has been find support around here, and we're now seeing strength to the upside. price is above the 200 and the 50 on the weekly, and it's above the 200 and the 50 on the daily. So everything's looking interesting. This should be on your watch list. What we now want to see is this high point clear. If this high point is cleared, then that at the earliest will suggest strength to the upside. Now, if we look at the monthly, we're still inside the pink lines, and there's quite a lot of resistance ahead. So where you enter into this would be quite specific. At the earliest, I would look to get in once 1.4 is cleared, because once 1.4 is cleared, it will also clear these pink lines, which are the resistance levels. So once 1.4 is cleared, we then have around 500-600 pips towards this pip. Now, this is an extended pip, so I am inclined to ignore it. If you want to be conservative, you'd wait for this high to clear and then strength to the upside. But once 1.4 is cleared, this is when I'll be looking to enter long positions. So this is very much on my watch list. Let's have a look at the US dollar Swiss franc. Now, I know the Swissy is not to everyone's liking, and that's because of the event that happened with the Swiss National Bank when the Swiss National Bank removed the peg against the euro at 1.2. If I just expand the charts, you can see this was that move that happened in a single day. Price fell several thousand pips, then reversed. But guys, look at, if we ignore this wick for now, if we actually ignore that bar, what we had prior to that was consolidation, and what we've had after that is consolidation. What does this tell you? What it tells you is that these moments in the market, these news moments, these black swan events, whatever, elections, etc., they tend to be fleeting moments in the market until whatever price was doing prior to that news takes over. Very good example. Consolidation. It's in a long-term consolidation going back to 2011, 2010, 2011, around this period here. This has been in consolidation. Bigger the consolidation, bigger the breakout. So if price clears this whole consolidation area, you can see that it's currently faced with the high of 2015, and there's a major pivot. So if it clears this area, then this is when we can start looking for long opportunities. Now, I wouldn't go in on the first breakout, because the first breakout can always be a fake breakout, particularly after a long period of consolidation. So again, this is where the element of patience comes in. What I'll be looking for is a move to the upside, a pullback to retest this as a support level, and then the next breakout. But this is definitely on my watch list. I'm not going to allow that US, the SMB event of 2015 affect me. We can see that it's trading above the 50 and above the 200. It's in an area of consolidation. And if you look at the daily above the 200, above the 50, and look at the moving averages, they're now starting to hook up. 50 is hooking up, 200 is starting to hook up. If you look at the weekly, the weeklies are still flat. The 50 is now just starting to hook up. The 200 is slightly starting to hook up, but generally they're quite flat. And that's because the weeklies are much slower moving time frame. But based on the 200, we're starting to see momentum to the upside. If it clears out of this high, then I'm going to start looking for long positions. Okay, let's have a look at the euro dollar. Euro dollar, definitely one on my watch list. The last time I traded this was this bearish trend to the downside, where I compounded just under 16,000 pips on 5 trades over an 8 or 9 month period. And this trend here grew my account by a large percentage figure. For people to understand what I mean by large, you have to understand compounding. You have to experience compounding to really understand how to make profit in a trend. If you make the kind of profit that I made in this particular trend, there is no need to day trade. There is no need to be chasing profit. Waiting for environments to appear is very simple. It's not a very difficult task, but what most people do is go straight to market. We live in a culture, this trading, this modern day trading world that we live in, it's all based on free webinars, free seminars, free software, free strategies, free ebooks, free forums, free WhatsApp groups. This is the philosophy and the foundation that a lot of people build their trading on. And because of that, they then expect the money to come in freely, just because all of that information is free. But it soon becomes very clear that the money is not going to come in as easily as people want. So by applying patience and allowing these environments to appear, a lot of profit can be made. Now, after every move, the market consolidates. And look at where it's consolidated, 1.1 round number. It's not a random level, it's a round number, showing you once again how significant round numbers are. Again, a concept that's explained in the ebook if you haven't read it already. Now, what have we seen in recent months? We've seen weakness to the downside. And price is now looking to push out of this consolidation. So if price clears this floor, then we'll see price weaken towards 1. If it clears 1, this will be significant, because then I'd like to see price move towards 0.8, which is the low of 2000. So again, just applying a little bit of patience. Hardly surprising that the breakout of this consolidation is to the downside. That's because the trend was bearish before this. So the bias is always in the direction of the trend. So a break below this support and we could see further weakness. Below the 200, below the 50 on the weekly, below the 200, below the 50 on the daily. Again, look at the moving averages, 50 hooking down, 200 hooking down. Again, look at how the 50 acts as a level of resistance, proven. Okay, same now, we're looking for that same movement and momentum on the weekly time frame. And that will really happen once price starts really creating new lows below this consolidation area. Until that happens, we must stand aside. You don't want to be too quick and too eager to get in. Allow the environment to present itself. And if you have a look at what's happening, price is currently struggling around that support level. Patience for now, guys. Okay, Euro Canadian dollar, another currency looking fairly interesting. It's inside the pink lines, but it's now trading below 1.4, which is a significant move, because we'd then like to see price move towards 1.3. So there's about 1,000 pip worth of space towards 1.3 support. Below the 50, below the 200 on the weekly, below the 50, below the 200 on the daily. Look at what price has done. It broke below 1.4. It's now retesting that level. If it breaks below this pivot, this will be a continuation, and this is when I will be looking to enter short positions. I'm not in this at the moment, but I will be looking to enter short positions. It will be at reduced risk, and the reason for that is because price is inside the pink lines. But this is looking fairly interesting. The way price is trending since this area here, this is quite a nice looking trend. So if this trend structure continues, then this will end up being a nice, neat linear trend that will offer not just good profit, but multiple compounding opportunities as well. Okay, let's have a look at the euro pound. Okay, so the euro pound, you can see that we were in this bullish trend, came towards 0.9 resistance, two major pivot levels here, and the round number 0.9. So we had a whole resistance zone. Price created this price created this bearish engulfing, and we've had weakness. But we can see that in this month, price has struggled to really gain any momentum to the downside, and that's because it's dealing with a support level. If we go to the weekly, above the 200, above the 50, we've also had a golden cross. And if we look at the daily, we're below the 50, but we're above the 200. So the overall bias is still bullish, above the pink lines on the monthly, above the weekly 200, above the daily 200. So the overall bias is bullish. The 50 is acting as support, which is what we want to see on the weekly, but on the daily, the 50 is acting as resistance. Aggressive traders may have entered on a bounce off the 200 moving average. That's not necessarily a bad entry point, because you do have a lot of factors telling us that there's further strength in this. Conservative traders will wait for the 50 to become support and then look for an entry above 0.9 or above this high point here. So the euro pound, not the best looking chart, very inconclusive at the moment. So really is a matter of patience and looking elsewhere for better opportunities. Okay, euro Japanese yen. Again, you can see that we've had this reversal to the upside. Price is trading at 120, but there are resistance levels ahead, multiple resistance levels ahead. Above the 50, but below the 200, above the 200, 100, and above the 50. For me, this is a good looking trend. Look at the way it's moving. But based on the resistance levels ahead, you have to be very selective. At the earliest, I would look for price to clear 130, and that's when I would be looking for long opportunity. But for now, not one that I want to be particularly involved in. Okay, pound dollar. Let's have a look at that. Pound dollar trading below the pink line, so it has a bearish bias, but 1.2 still acting as support. Below the 200 and the 50 on the weekly, below the 200, and now back below the 50 on the daily. But until it clears out of this consolidation, this is not an area that I personally want to be trading in. So once price breaks and closes below this support, that's when I'll be looking for shorting opportunities, because it will then also clear 1.2. And if we do get that, if I compress this, you can see that we have space all the way down to the figure 1, which is the low of 1985. So with a little bit of patience, we will then be rewarded with potentially 2,000 pips worth of space for price to move towards. Okay, let's have a look at the dollar yen. So dollar yen, you can see again, good move to the upside. It's trading above 110 round number, trading above the low of 2015, which is acting as support, but we've got resistance ahead in the form of the closing price, the 120 round number, 2 major pivots, and the high of 2015. So you can see plenty of resistance ahead. Conservative traders will wait for this high to be cleared. Aggressive traders will find an entry within this, but will be very strategic with where they enter, how they place their stop losses, how they manage their positions, how they manage risk. This has to be all pre-thought out. Above the 200, above the 50 on the weekly, and above both moving averages on the daily. So the weekly and daily are moving in the same direction. The pink is the monthly rather price is trading inside the pink line. So you want to be a little bit you want to be cautious, but you want to have trades well thought out before you actually execute any. The conservative trader will simply stand aside until the high is cleared. Okay, Swedish krona, definitely a currency on my watch list, and you can see why. It's trading above the pink lines. Now, I last traded this in this bullish trend here. Round number 9 acting as resistance. Price went through consolidation. It's now broken out. And if we bring up my resistance tool, you can see that price is struggling to break through. Price is struggling to break through this high. Doesn't mean that it's not going to happen, and doesn't mean that this is an environment to start entering short positions. No, what you want to do is apply patience, wait for this resistance to become support, and then we can start looking for long opportunities. So it really just involves patience for now. Above the weekly and above the moving averages on the daily. You can see that we do have a nice trend in play, 50 moving average acting as support. We've had a significant move to the downside. If you're in this already based on a position going short, reversal trades are short-lived, guys. Look at the movement of the upside. Look at the movement to the upside. Look at the movement to the downside. So each time you try and pick a top or a bottom, you are very likely to be disappointed. And that is exactly how people blow trading accounts. What you want is to go in the direction of the trend. Okay, so again, matter of patience, waiting for a correction to the upside, waiting for this high to clear, and that's when we can start looking for long opportunities. Okay, Turkish lira, this is a currency that I am long on. You can see that we had this long period of consolidation, then we had a breakout. We had another consolidation here at the round number 3. We've had strength to the upside. What we're now looking for is this to continue. Above the moving averages on the weekly, above the moving averages on the daily. So a beautiful looking trend. It's probably one of the best looking trends in the currency market at the moment, along with the yen currencies. Nice move to the upside. Nothing more than consolidation at the moment. So this is where we need to apply patience. And I have orders pending. So I have long positions waiting to be triggered that are sat above the high of this point. I'm now looking for momentum to continue back to the upside. And that's when I can look to enter positions. Okay, let me just go to the chat box, see if there are any questions. Hi, what is the line between the PH and PL? That's the closing price. So that says PC. So that is the closing price of that calendar year. So PH is the high, PL is the low. So previous high, previous low. PC is the previous close of the calendar year. So just to sort of highlight what I'm talking about, 11:59 p.m. December 31st, When the new year, 12 a.m., when the new year comes in, that's the closing price, which is the opening price of the new year. I hope that makes sense. Okay, there doesn't seem to be any questions, so I'm just going to direct you all to my social media sites. Okay, so beyond the ebook, if you want to get involved in trading, some training, if you want to get beyond the the approach of day trading but are struggling with holding positions for longer, if you want access to better tools, get away from MetaTrader and all of these free software, you want to think more in terms of a business, if you want access to high-end cutting-edge tools, if you want strategies that work, if you want to be part of a community of traders, if you want training in FX and stocks, if you want watch lists, if you want opportunities to actually trade. So some of the opportunities that our current community members are actually taking advantage of are Zion. Zion is a stock within the financial sector, and you can see how this is now creating highs to the upside. Another stock that community members are taking advantage of is AMAT, which is Applied Materials, and you can see how this is moving nicely to the upside. So we actually give you watch lists. This saves you a lot of money. Like, a lot of people ask me, how do I find my stocks? And the answer is software. I pay £3,000 approximately a year for the scanner that I use. And this scanner is powerful. It scans through 5 to 10,000 stocks, and within a minute gives me opportunities based on the criteria that I put within the scanner. Now, my community, our community, the Dynamic Trader community, saves a lot of money because members in the community don't need to get that software. I have the software. Other senior members of the community have that software. We do the scanning every single day, and we put this in the community. So you're saving yourself between not just the £3,000 a year, but you're also saving yourself money from having to buy these watch lists. If you go on the internet and buy these watch lists, you'll be looking at hundreds, if not thousands of pounds on a monthly basis. These are top end stocks. Excuse me, our community members get this information totally for free. Okay, so if you want access to these stocks, please check out the following website. It's only £99 for a month. That will include VAT, so that's £99 plus VAT if you're in EU. If you're outside the EU, then it's £99. Please have a look at this website. If you want to email me any questions, zaheer@zaheeranwari.com. If you want to add me on Facebook, please search for me. I'm on Facebook. Zaheer Anwari is my name. I have a Facebook page, which is City Trader Lifestyle. That's because I live in the city in London. A lot of posts that I put up, a lot of information, a lot of charts. So if you're on Facebook, please like my page and please stay up to date with it. I do have a Medium blog as well. I don't know if you guys are familiar with medium.com. It's owned by Twitter, and I put blogs up here on a daily basis. I've got 359 followers, and I've been updating I've been updating this blog for the last 2 weeks. So you can see that I'm picking up quite a lot of followers based on the information I'm putting out. And I've already got people commenting and emailing me regarding training and information, because the information going out on this blog site, you won't find anywhere else unless it's another member of the Dynamic Trader community. I'm on LinkedIn. Please search for me. I'm also on Instagram if you're on Instagram. So fx.mentor, please follow me. And the ebook, as finally mentioned, please email me on zaheer@zaheeranwari.com. Okay, I'm conscious of the time. You're welcome. You're welcome. Okay, I'm conscious of the time. Thank you all for attending the webinar. FX Street, thank you. FX Street administrator, is there a webinar next week, or is this the last webinar for the year? Oh, okay, it's up to me. Okay, brilliant. Okay, well, it's the 28th, so I guess, we can do one next week. Okay, so I'll see you guys all on the next webinar. Okay, thank you all very much. Have a lovely end to the day, a lovely end to the week. Have a great weekend. Merry Christmas, and see you all on the next webinar. Thanks, guys. Bye.